Testing, 1, 2. What's up, people? How we doing? So today we're going to be doing like a 2-in-1 stream. We're going to be doing a 2-in-1 stream. So we're going to start off by going through the markups we gave out, as we normally do in our Sunday Outlook video, and then we're going to go forwards onto the live charts and take a look at some stuff and all that good stuff. So we're going to start this live stream off by looking back at the previous week's markup for euro to the US dollar. Now, again, you can go and read all of the information about this, all of our text work that we have behind it, and of course you can see the charts, based off of what we're looking at, leads us into the following week's report. So this week you can see, last week you can see that we were looking for a more sell side, then we had this area that we were looking at, this high potentially being ran, and then a sell-off down, or a continuation sell-off just down anyway. Now when you play this forwards, you'll see that we actually had a beautiful run into those areas and then price sold down through those lows as we predicted. So really, really clean. Now coming into this week, we had a similar outlook. Now the only difference is we're a little bit more condensed this week, and we opened with a gap. Now generally, not always, but generally when you see a gap like this open, it almost, well, I don't want to say all the time, but most of the time it ends up being filled. Now, it ends up being filled because of a couple of different reasons. One, because there is a clear level of imbalance there, and there is, of course, a gap. Now, most of the time the market is going to work to realign this pricing, and generally it will come down to here. So this week we're looking at price action going bearish once again. We're looking at the liquid highs that are placed above the area of supply. We're looking at the area of supply itself that caused the last major low to be ran. And then we're looking at, again, price action heading into these areas and selling down, or price selling down beforehand. Now, because we opened with a gap, we know the probability is we're going to push a little bit higher and then the sell-off may come. So playing this forwards, you can see we are actually seeing that. We're pushing into this area now. At the moment, we have no reaction, which is fine. And again, we've said this before. We can be incorrect with a bias. That's fine. It's not about these biasing and markups. It's not about being correct. It's about having a generalized idea that we can turn into a usable principle and scenario that we can actually capitalize on. It's not about being 100% correct or being right all of the time. So that's euro. Now, if we head into gold, we'll go into last week's markup, so the 17th once again, and you'll see we have a similar thing here. Now, we did have a scenario where we had a midweek bias shift. Now, our daily time frame bias changed to bullish. We didn't update our charts because we do it every Sunday. Now, we did showcase and say in the live stream last week that we are now biased bullish on gold, and we expected it to shift bullish. But from here, we had the scenario that we could just run the high, run the area of supply, and continue pushing bullish up through these highs. And of course, you can see the potential for price action running down and playing off of those lows, off of those highs, sorry, giving us a push back down into those areas that we were targeting beforehand. Now you'll see the price action actually just shifted bullish, and it sort of followed the trajectory that we wanted it to follow. So again, that's a great example there. This week we're looking at the trajectory to the upside carrying over, area of supply, and of course an area of demand. Now we are pretty open to our bias this week, so there's not a huge amount I have to say about this except for the fact that we are currently bullish and we're looking at highs to be ran. So that's our weekly markup so far. So we're going to go to the live charts and we're going to discuss now a couple of ideas that we have coming forward this week. So I'll be with you in a couple of seconds and we'll get right into that. Okay, guys, so what are we looking at for this week? Well, you know what we're looking at on euro, you know what we're looking at on gold. Sometimes those analysis play out really quickly, sometimes they don't. Um, for now, we are mainly looking at also a couple of indicators coming in the near future. Some very, very good ones. I spoke about them last time, but they essentially were prototypes of the real deal that we are actually in the middle of making right now. So we have, at the moment, a bullish bias on gold. Now, based off of that principle, we know where we want price to go. We want it to go down, because remember our outlook and our weekly charts that we give out are slightly different to what we actually show in our live streams. And the reason for that is because something that you use to have an outlook of the weekly movement doesn't have to be the same as something you use to capitalize on that movement itself. So just always keep that in mind. You know, you don't have to have complex, crazy chart work. You can have simple, easy chart work. So again, this week, these lows right here, high level of liquid. Looking for these to be taken out. If we take these out, I will be looking for longs up to our target highs, which again you can see up here. Very, very simple. That was an old target that we had when we were bearish, but we're no longer bearish, so we don't target that anymore, right? Excuse me. So let's go over to euro. We're still bearish on euro, as we said in our markup. We're looking for these highs to be contacted, but then a sell-off. We did have this taken and this taken, but that was all short-term movement. You see here that we had a short-term sell from the run of that high, like I just explained, but it was very minor. Didn't go any further than a 1 to 1.5. Price was secured after this drop-off, and then it's come back up to BE. Now we're running up high again, so we don't have a huge amount going on. There is potential for a sell from here. And that is based off of that 4-hour high being ran. But for me, I'm not a massive fan of it. I'm not a massive fan. Doesn't mean that it's not valid. I'm just not a massive fan. Remember, it doesn't really matter how you feel about it. It's more of a case of, does it meet criteria? The reason why I'm saying this is because instead of me shorting at internal highs like this, I would rather wait for a bigger external high to be hit. So if you are looking to enter it, in my opinion, it's just better to use less risk. That's just my opinion anyway. What's going on? Hope you're well, Void. Void's been super active in the Discord. If you are in the Discord, go and check out some of his work. He's been multitasking, watching the Keep It Simple series, along with taking his own trades off the back of it. Again, showcasing that the system works across every time frame, across every asset. So again, it shows you, if you put in the time to learn a system, you can apply it whatever way you like. Tickle, I hope you're well. I'm alright, thank you, my man. Just busy. Yeah, just busy. Busy developing the new system that we're going to be using to auto trade. Busy developing the indicator. Busy doing marketing. Lots of stuff. 2025 is all systems are go. Our website should be up and ready by the end of the year. So you guys will be able to go to that website and it'll be your hub for everything that you need. So if you're not a Discord fan, you know, you're not a massive fan of Discord, you can still be up to date and find all the relevant links. All of the good stuff that you may want will be there on the website. How was everyone's weekend? Was it good? I believe that was a high, yes. So we had a sweep of this high. You can see that we didn't actually leave any gaps here, so there was no entry point given, unfortunately. And we can turn this on, so you'll be able to see, and you'll see there's no sell point given here. And again, even this indicator, to keep it simple, entry indicator, look at the way if you just follow the bullish bias on a short time frame, get a beautiful move there. Obviously, if following bearish, you wouldn't have got tapped in. If following bearish, you would have got taken out. But if you're following short-term order flow based off of a shorter-term bias, you will more than likely be seeing alignment from your entry areas and your actual entry points. So keep that in mind. This indicator will be coming out very soon publicly, so you'll be able to apply it. And this will only highlight points that are valid for the keep it simple entry principle. Whether you're long or short, only going to be showing valid points. Excuse me. I backtested VIX, bro. Got too much sauce. Indicator is so clutch. Yeah, man. I'm glad you like it. Plumbers here is one of our first testers of the beta indicator, so he's speaking firsthand there. Okie dokie, so very soon the indicator that we're going to have is only going to show you daily bias aligned areas of entry. There is going to be a vast shift in the way that it's viewed and the way that price action is actually displayed to you. And it's almost going to completely eliminate the need for, not all, but it's almost going to completely eliminate the need for analysis. When most indicators you think, oh, they're just showing you, areas like this where you could enter or something like that. When you back these areas with your points of confluence built into an indicator, what are you needing to analyze the markets for? All right, as long as you're aware of the fundamentals and things that maybe affect the principle of your entry itself, apart from that, you're good to go. You are good to go. Let's see here. Do we have another run? So we had this, or you can see these lows in here. Let me change the color of those. 1 second, guys. Make them black so they're a little bit easier to see. So you can see if we just wind this in and just get rid of the areas of supply and demand. And you can see here, these are 4-hour lows. We took out the 4-hour lows. So if we have in here on the 15-minute another point for potential entry, then there may be an entry to go long with. Now, again, this is based off of a gap opening. So this is why I'm waiting for higher time frame points. So just the same as Euro, running these is almost, it's almost like it's not a true liquid sweep. The reason I say that is because we opened down here. So you're not truly seeing price have an order come in, it seek that point that it wants to hit, then an adjustment being made. It's opening up at the point where it's taking that liquid. So it's not a true grab. Now, using the principle without having the gap open, if you were looking down here, you're looking towards this sort of area, right? Because of the principle of this being taken out. We know there's a gap here. So we have to be mindful of that. Turn on the... Again, you don't need to turn this on, but it just makes it so much easier, right? There's your entry point. So here's your entry point. Now it wouldn't be this, because that is way up after the sweep. That's your entry point. Again, I didn't take this entry. I'm not trading this right now. You'd be going long from that, looking to take it up into these highs. And that's based off of the same principle. Where is the liquid low that caused that sweep? It's right there. Where's your entry point? It's right here. Where are your targets? Well, of course, you would work that out based on higher time frame. Daily target. So one of them is this high right here. The other one is this high right here. Come down, and again, you can see we don't need to highlight on the 4-hour chart these 2 points. It's obvious where your target should be, right? So some really, really interesting things that are going to come from, again, I'm not recommended to trade this, guys. It's completely up to you. Any of the stuff I show you during the streams, it's completely up to you if you choose to trade it or not. It's a very clear entry, price tapped in. Again, we've kind of missed the boat now with it moving up. Until we clear our gaps, I mean, that's actually cleared. It's actually cleared already, so that, in theory, we could have actually taken. Until we actually have like a decent movement across the board where all the pairs have cleared their gaps, I'm just waiting for price action to readjust itself. To be honest, I want to see a nice clearing. So you see how like AU has only just cleared this out. Only just fully cleared it. The gap is there. The low of it is there. Actually hasn't even cleared it properly. So coming back down to clear that out again is most likely going to happen if we see that low right there. So bias on this is bullish. If you see what we have now, once this forms, if it stays above this point, it will give you another 4-hour low that you can use to reference if price decides to come down, go long, right? We're looking for that bullish move. Now, we may be wrong on this. We may be wrong in terms of what direction it's traveling in. But our bias is given to us off of a rule set, not off of how we want price to move. As I said, guys, today's stream is it's a little bit later. It's more of a stream because we've been consistent up until now, so make the most of it sort of thing, rather than being here to be like, you should trade this, you know, not like that we ever do that anyway, but you know what I mean. Okay. Go back to some of our... So we have alerts for these highs being swept out. We have alerts for these. The same as this, I believe we're bearish on this. Yes. So Euro A, if we come up and take out these highs, we're going to look to sell down through those lows. Do we have an alert for this? I will see. Euro A, Euro A, Euro A. We do not. Let's get rid of that. Get rid of this. Get rid of that XRP. I don't need that anymore. And all we're doing here is we're just going to alert all or any function, and it will tell us when that alert goes off. It will say high being ran or low being ran. So we'll know if that gets swept out. Like I said in Discord, EU stronger than GU. Yeah, I mean, across the board, to be honest, I think they're both going to sell heavily. Like I said, this entry is running quite nicely now. You guys did have a chance to get into that, like I said, but it's completely down to what system you're trading. Of course, if you're using the same rule set as me and you're trading the keep it simple principle, then that entry is completely valid for you right there. Where it was valid. Don't enter right now and expect it to do the same because it's not how it works. So remember the system that you see created in this indicator and giving you that area to sell from is the system that we teach in the Keep It Simple series. So you can go and watch that and learn the system for free in the space of like 2 hours. Obviously, it might take time, you know, rewatch it and things like that. You can do it completely free and be able to analyze it in the same principle in around 2 hours. Go over to GU. Yeah, big push on GU. It's a shame there was no entry given. No entry given after the 1 hour sweep. Not 1 hour sweep, 4 hour sweep. It's a shame. But you're not always going to get those entries, and that's part of the way it works. I just read an article here. Woman accidentally bins boyfriend's 569 million worth of Bitcoin. She says, "It wasn't my fault, but I hope he finds it because it will finally shut him up." Yes, I think that's your cue to leave, my friend. I think that's your cue to leave. Imagine someone throws away £500 million worth of your property and then says it wasn't my fault. I hope he shuts up. Wow. Wow, wow. That is diabolical. Dixie back to get its revenge on me. Yeah, this is why I personally don't look at like the DXY. I mean, I used to because people used to like me referencing it for higher time frames and stuff like that. But personally, I don't look at it because it's kind of like this, right? Let's say you have a prediction that the DXY is going to go up. And therefore, because of this, you have a prediction that your other pairs, so X pairs, are going to go down, right? If your directional bias, if you were, or your bias of DXY going up is the only thing that defines your bias of X going down, then 100% I agree with it. But if you were to take both of them, so you say X and you say Y, okay, if X is your currency index and Y is the currency to a different pair, if the bias of this is going up and the bias of this is going down without you needing to cross-reference them, for me, it doesn't serve any purpose to analyze an index if it's going to give you the same answer that analyzing the currency to another currency will give you. So for example, if I go to the DXY, and like I say, many people it works completely, with what they do. For me, if I look at this, my bias is bullish on this. And I actually gave the bullish bias and set this target, if you guys remember, this target right here. I said that's the target high for me, we're going bullish again. Same thing applies, that's the new target high, I'm still bullish. So for me, that tells me this is going up. My bias for Euro is bearish, and it has been for a long time. So they are both opposite of each other. So if I'm wrong on this, I'm also going to be wrong on the DXY. If I'm wrong on DXY, I'm also going to be wrong on this. So for me, I don't need it personally for the way that I work. Now, I know a lot of people's systems depend on it, so that's the main feature. It's all about what works best for you. Exactly the same with what Akram's doing. I know that his stuff works a lot of the way it ties in to the indexing, which is great, and he uses it because of that principle. They're all tools at the end of the day, and if you are only tapping in a nail, you only need the hammer, you don't need the drill, right? Whereas if you're putting up pictures and a shelf, you might need the drill, you might need the hammer. Like, it works, you got to use what tools you need to get the job done. So for me, not needed. Each pair has its own individual bias based off of its price action. But yeah, it's, I think, a really, really good way if your system is kind of needing confluence, that you can confluence. But at the same time, whether you're using it as a confluence or you're using it as its own thing, it's exactly the same as analyzing the pair itself. If you're wrong, you're wrong. It's not going to give you more probability because they both say one's up, one says one's down. It's always something to think about. I have, I believe, a bearish bias on, yes, a bearish bias on Euro NZD. And was it Euro A that just took the highs? Excuse me. Bearish bias on this as well. Now, there was a daily low that was taken. Here, yeah, right here. And I believe there was an entry given here. So I did explain this last week. The entry would be around this point and your stop would be here. So it's a huge counter entry, but the entry would have worked. So you would have got that upside movement. Now we're coming back into the trend alignment. So we've just taken this high. If we go down to the 15-minute, once it decides to load, we'll have some spaces, right? Notice how the last move was bullish. If we then get a bearish move, probability is that we're going to sell away from that, right? Just the same as we had on Euro. Sell away from it, same principle. It's because of the confluence we have at this level that if we see the money in, money out principle, again, taught in the Keep It Simple series, you can ultimately put your trust in that point, at least for a probability basis. Yeah, exactly. Exactly that, Akram. And this is another thing with it as well. Some people just like having the DXY up because it's part of the currency basis they're trading, which is great. And that's why I say, trading is completely personal. So it's whatever suits the individual. That's the main thing. even if it so serves no purpose to you, and you say, I like having it there, then use it. This is the main thing, right? So again, still no space. This will probably be the first, yeah, the first space. Now this is actually printing early, and this shouldn't be printing yet because this gap is not formed. Again, these are, or this is a prototype version of this indicator. So it does have a couple of things that need ironing out within it. Again, Euro N, we didn't run that high yet. Euro A, still looking for that space. Remember, we're not actually going to take a move on that unless it gives us what we want to see. And guys, once we get the full indicator running, we're going to be hosting some indicator proofing streams to show you that it highlights the points that you need to be focusing on, and it allows you to actually go hands-free when it comes to analyzing the charts. So, what is everybody looking at for the rest of this week? That's running beautifully as well on UJ. Again, we'll show you the principle and what we're looking at. This is an example only. Unlike the Euro trade, I actually said the Euro trade, this is a position you could take. Price stayed there for a little bit, then it moved. So that's a position you could have actually taken right there. We're waiting for higher points of liquidity. I am personally. You don't have to. You don't have to do that. That's a personal preference. UJ, again, that's the point you'd be looking at right there. Remember what we spoke about. This would be your first target, 2.6. That would be your second target, third target, so on, so on. Again, referencing the higher time frames for those points to target. Once this loads, you'll see. 1, 2, 3. There we go. First target, like I say, 2.6, 2, 3, 4. If you're really lucky and it gets all the way up there, brilliant. One of your one of your less probability targets have been hit. Remember, when you have probability behind targets being hit, that is the principle of everything trading. There is no 100% probability. So, based off of that principle, if you're lucky enough to see price travel to your less probable areas, then you are just on the right side of that probability. Kind of like flipping a coin, let's say 50 times, and you getting it to go heads 25 of those times, not 25 of the times, sorry, let's say 40% of the times. It doesn't make one or more of those faces, or both sides of that coin, less probable. It's still 50% the whole amount of time. Whereas in this case, raising it up to a higher point when you're ultimately taking your risk reward up to nearly 9R, the probability of it doing that consistently is not going to be 50%, it's going to be less. Now, if you bring this target down, your probability is going to increase. Each time you move it to the next high, probability is going to decrease. That's why we've said it before, that some people find a system they enjoy, take the principle behind it, and then just apply a really low risk reward basis to it, because then the consistency of that target being hit becomes higher because of the basis of the system and how consistently it works. So don't be afraid to do that. It's something that you can do. Again, it's all personal preference. Can you check GBP AUD? Sure. I don't know where it is. Yeah, GBP AUD. Okay, so let's just clear it off because we don't need to draw anything on here now. Okay, so bearish, you can see, look, I can delete this. Okay, we don't need this. We just track price from where it is. Where's the last gap? Here, cool, bearish. Boom. Easy as that. Daily high, if we hit here, brilliant. Is there any daily lows? Here. Okay, great. This could be a daily low depending on where this candle closes. Yeah, you don't need the indicator. But it's going to save you a ton of time. So it's the same as this, right? We can assess off of our bearish bias where our target points of entry are going to be. One's here, one's here, one's here, target low. Brilliant. We're aiming for this, and we could trade from here, here, or here. Turn the indicator on. Boom, it's done for you in seconds. Here, here, and here. You can see that point. Cool. So it's always down to the principle of what's easier, all right? What's easiest. Now, something that you will notice is that we have a plethora, an absolute plethora of highs across here, meaning there is quite a lot of money sitting around here. So interacting with these points is still going to mean the same thing to us, regardless of how much money is up here. We want to sell it, right? We want to sell it. So that's your bias. You look for points to sell the pair from. Excuse me. Long weekend, guys. Long weekend. I'm looking for this high to be ran. I believe it's that high. Yeah, this high to be ran and this high. So we'll just set an alert on this. Simple as that. 4-hour alert. Beautiful. We know now. If anything happens, we got it. So for GA, looking at this high and this high. If you don't get anything out of those, look for that high. Then just confirm on your higher time frame that you're still bearish. Okay. What's going on, John? Hope you're well. Like I said, guys, we are in the stages of having the full all-in-one indicator built and ready for testing and release. Now, we're not going to have any drops or releases of this system until we have had some preliminary tests taken as well as back testing. Even though we know that the system, the indicator is based off of works, you have to make sure the indicator itself performs in the way it should. So back testing and of course debugging, things like that is very essential. Of course, Floyd, no problem at all. Good, I'm glad you're well, John. Andre missing the oil short. You're all over the oil short, aren't you? Let's have a look. Mm. Oh, look at that. And look at the target sitting there as well. I imagine you're using it on the hourly there, Andre, and you were looking for that sell-off right there. That would have been crisp as well. Correct me if I'm wrong, but I'm sure it would have been something along the lines of that. Oof. Disgusting. That the trade you were looking at, Andre? 1 hour, yep. Sorry, dude. Okay, I'll stop. We got the XRP still pushing up right now. We took out. I'm interested because I haven't been tracking this. I'm long term on this. So let's see if. Okay, so we saw on the 4 hour. You can see this, and again soon the indicators will be there, so you'll be able to see it. We took out the lows, right? Come down to the 15. This is your point of entry. That's your stop, and this is on a XRP chart, so relatively volatile. That's where you'd look to go long from. Does it stop you out, or does it actually go long from there? Either goes long from there. So that's in itself a really, really good example of the way that this system can be implemented literally across any basis, any basis. And the same thing as well, if you look on the 4 hour time frame, look at the points that these areas form, right? Beautiful taps in, forms, beautiful taps in, forms again up here, Beautiful, price is just tapped in, so we're looking for that up move. So the same principle, the money in, money out concept works across the board. It's not a singular time frame. You have to use this time frame. You can do whatever you like, whatever works best for you. We're still looking for this gap down here at the moment. We are waiting for that gap. Okay, so we had a prediction for a potential short off here the end of last week. Didn't work out. Simple as that. Didn't work out. We were wrong. Our daily bias is still in place. We're still looking for sell side. At the minute, it's not looking very likely. 4-hour highs are up here. We have quite a lot of lows in place. A lot of lows down here that are just clusters up. We'll see. Got alerts for that as well. Euro A, we're still waiting for that gap to form. We do have an alert on this, I believe, so we'll know if it decides to move. Yeah, it has been a long day, Akram. You're right. It's been a long day, my dude. It really has. If you're in this, go break even because you're at that 1-to-1 plus level, so you're at like 1.5. So just let that run to the nearest target if you're going to hold it. If not, then you can of course go BE or just take your profit at 1.5. Completely up to you. Let's have a look at Euro GBP here. Daily bias is bullish. 4-hour low is still in place from last week where we left off. We've come and taken out the highs again. That's the bullish bias right there, and we're now looking for price action to come, take out some lows, and then we can go bullish into these long areas. I haven't really been buying or selling that, to be honest. Euro selling down beautifully. Need to see if we can get it down to some of these lower points. That's your ultimate target if you're holding for the long term. That's your ultimate target right there. So we are going to keep today's stream relatively short. We're not going to be holding the longest stream in the world. another 15 minutes or so. So a really nice little move there. So if you're wondering why this is the area we're looking to sell from, or the area that we said the price is going to sell from, should I say, it's because we took out these two 4-hour highs within here. We're overall bearish, so opening up the money in, money out principle after sweeping those two highs tells us that it's more probable that price is going to sell down to those lows. Following higher time frame bias, after a sweep of significant liquidity, we then have a clear run down to the lows. It's as simple as that. GU. Let's go with Euro AUD here. GA, let's just run the highs. So we've just run the high here. We come back down to the 15. Keep drawing lines everywhere. You can see we're clearly pushing up with no momentum to the downside. So we're not going to sell that because we don't have the principle based around what we're currently doing to sell at. What is the point of selling something that you don't have the principle to go and say, I think this is going to sell, right? If we get another alert, price is running up higher, or if we get an alert to tell us that pricing is actually starting to change, then we can look for that shift. I forgot to ask, does the live execution help the members in Discord? Yeah, so, yeah, it does help, but the thing is it's set around limits, isn't it? It's set around limits, so execution of orders, and obviously when you're posting pictures and things, That's great, like that's fine. But it's more about this is something that a lot of people always forget. And this is the principle of without being able to consistently analyze and have the same result through analytics, you are never going to be able to implement another element like execution and expect to maintain that consistency across the board. Because what's happening is it's kind of like learning to make the starter or being good at making the starter of a 3 course meal or a 2 course meal, and then adding in the main course before you've actually learned how to cook the starter. Like, it's not going to make the starter any better. It's just going to make the whole meal bad. Like, you have to make sure that you're consistently in line with your analysis. So you're consistent across the board with analysis. Then you can factor in execution. And this is why I always say limits are the best way to do it, because it's a set here, and I walk away. There is no, oh, should I press sell? Should I press buy? So it's always a tricky question because everyone's always like, well, I mean, especially these Instagram gurus, they're always like live trade. Um, and a lot of time it's demo. And people forget as well, you know, you see these gurus that post, um, they post like profits for this month or something like that. There's a filter on there where you can just show profits, you know, or you can just show X amount. So I think it's, you know, it's really, and the thing with it as well is like numbers and the profit side of things really can work against, you know, the growth curve that a lot of people have to go through. Could work against it. You know, that was the main thing that caused me to lose money when I started, was because I saw people making these absurd amounts of money, which ultimately turned out to be complete bullshit. Um, and I was like, oh, I need to start trading now, you know. Whereas if I'd never seen that money and I'd seen people marking up the charts consistently, I would have got good and consistent at marking up the charts before I started trying to chase things that really I was not going to be able to reach. And this is, again, you know, people take big advantage of this, and people will encourage new members to join, you know, membership programs and things through that monetary value. And this is something that at Pip Surfing Society we've never done. Like there's maybe been the odd occasion where I've showcased like X amount of money in an account or X amount of money gained. But I'm not sitting there being like, look at all this money I've made this week or this year. It's not about that. Ultimately, the skill being mastered is the analysis. Once you've mastered the analysis, the execution just becomes part of it. Um, but it's the biggest hurdle. You know, clicking buy and sell is easy. It's having the self control and confidence in your work before you get to that point that makes you, how I would say, um, independent. This is a big test, right? This is a big test for any single trader or analyst, whether you're at the analyst level or you're at the trader level. If you look at somebody else's chart work, so let's say for example, there's 5 of you in here that have a sell limit set or a buy limit set here for whatever reason. Again, it's irrelevant what the reasoning is. You have a buy limit set here, and then I mark something up and I say I'm looking to sell. If you ultimately hear my opinion and then you say I'm not buying that anymore, you're not confident in your own work. If somebody else's analysis is able to shift your willingness to trade your system, you need to work on your confidence and your consistent analysis, because that is where you're seeing the issue is you're not confident in your own work to be able to back yourself. You let somebody else's work dictate what you think about a market. That is where you're going to go wrong straight off the bat. That is again where a lot of people. That's why signal services do so well, because people don't have to have confidence in themselves. They just have to believe in someone else. It's a lot easier to believe in other people than it is to believe in yourself. And again, that's why so many people go to the big money men that show you money and Lamborghinis and hire cars and holidays to Dubai, paid off of commissions through members losing money. They're just having confidence in that person that they can teach them. Whereas at Pip Surfing Society, and what I like to think that we are able to do is give people confidence to trust themselves. You don't need to see a Lamborghini and a holiday to Dubai to believe that a system's going to work. You see it working across a long period of time, and it gives you confidence in your own understanding. Whether you take a slightly different twist on that, whether you're trading a completely unique system based around the same principles, whether you're literally using a carbon copy of the system that you have learnt from. It's irrelevant what you use. It's about the confidence and consistency you have in the analysis and your understanding of what the chart data is telling you. So gold, big dump here. Remember what we were looking at on gold? Looking at these lows, looking at the lows being taken out. We have an alert set on gold. Good, I'm glad, Akram. And this is again where a lot of you guys that are in this stream a lot, and you've spent a lot of time in the Discord or around myself when I'm analyzing and things, people will bring their opinions and ideas to me and they'll say, I'm looking to do this or I'm looking to do this. And I'll either damn right disagree or I'll agree. Simple as that. And the reason for that is because I'm confident in my own analysis. And if I'm wrong, I'm wrong. But what you can't do is let other people sway your opinion. If you've missed something and your rule set is clearly not met, then you can obviously open up and be like, oh yeah, fucked up there. Should have been this. But it doesn't have to be. So, it's easy to be confident in your own work if you have the time to back it. If you've backed it and you've continually tested it and you know that it works, it doesn't matter if you're wrong or right once or twice, does it? And unfortunately, a lot of people have the issue of being wrong or right because they've got an ego problem. That's the main reason why a lot of people can't handle it. It's because their ego can't hack it, the fact that they're not correct. Which is a shame. And then you get the gurus that have their egos as well, and even when they're wrong, they're right. Like they could be the wrongest wrong there is, and they'll still find a way to turn it around and say it was the market, or it was this, or it was that. It's like, just accept that you're wrong. It's okay to be wrong. Okay, guys, so right now we are sitting close to points of interest, but not really doing too much with them. I think we are probably going to wrap it up. The market humbled all of those. No ego here. No, exactly. And that's another thing as well. You'll notice that the people that are in the community and that stand out in the community at Pip Surfing Society and communities linked to it, not that there's really any communities linked to it, but none of them have an ego because they all accept the fact that it's a probability based movement. It's not about being right or wrong. Excuse me. Right. So I'm going to wrap it up right there. I think it is a pretty good time to do so. It's 20 to 5. I have a couple of things to do this afternoon. I appreciate everyone joining me. We'll be back tomorrow normal time, around 11 o'clock midday. And we'll be giving you more updates on the indicator and the website and all of the good stuff to come. So I appreciate every single one of you. Appreciate all the love, all the likes, all the comments, everyone that said hello, everyone that said goodbye, all the people that have joined the live stream, watched for 30 seconds and gone, fuck this guy, and left, all the people that have been here from the beginning. I appreciate all of you. So whether you've liked it, disliked it, you're in the middle, you don't really care, wherever it may be, stay safe, have a great rest of your day. Always peace and love, and I will see you all in tomorrow's live stream. Trade safe, guys. Catch ya in the next one.